Hi, Amanda Kendall here with Elevating Profits. Today I want to talk to you about some of the most overlooked tax deductions for business owners that I run into all the time. Doesn't matter size of the business, doesn't matter industry for the business. These are things I run into all the time that we're constantly reminding our clients are tax deductions and write-offs for them. So with that, we're going to give you 5 today, very common overlooked things. Now, I want to encourage you with this, that being in business, it's not just about making money, it's also about saving money and being strategic with your money and using some of your money to grow in other areas of your business and maybe develop other revenue streams and develop retirement strategies and all of these things. Your business is a vehicle for all of this and it can be absolutely phenomenal. So with this, let's jump into these 5 things. And the second thing I want to kind of tell you about really quickly here is that your accounting professional cannot pull these numbers out of thin air at the end of the year. So your record keeping and your tracking systems throughout the year are going to be paramount in making sure that you're maximizing these 5 most common overlooked things. So the first thing that we want to talk about today is technology and technology supplies. So I want you to think about this. The majority of you probably run your business off a laptop, a cell phone, maybe a tablet. You might have the plug-in microphone, the lapel microphone, so that you can have better sound quality. Maybe you have a tripod to be able to record video trainings. Maybe you have longer cords so that your microphones work. All of these things, if they're being used in your business in any way, are a potential tax write-off for you and business deduction. Now, I'm not saying that you're going to go out and you're going to buy the brand new iPhone and a brand new Mac laptop and be able to write off 100%. That may not be the case. You're going to have that conversation with your accounting professional. But chances are a portion of it, if not all of it, is going to be a tax write-off for you. So make sure that you're tracking these things and you're keeping them on a list and a spreadsheet in your software, whatever it is you're using, but make sure at the end of the year that you're talking to your accounting professional to make sure that you're getting the biggest benefit for these types of things here. Number 2 is phone and internet service. So we're not talking about the actual phone itself or like the technology components that you need to have the internet running smoothly. We're talking about the actual service itself. 9 times out of 10, we have to have internet to run our business. 9 times out of 10, you have to have a phone to run your business. Most business owners these days are doing everything remotely. We're all working off our cell phone. We're all working off laptops with Wi-Fi access, whatever that looks like for you. But keep in mind that these are necessary services for your business. Doesn't mean they're 100% write-off. Not always, but they could be. So with your phone service, if you can prove that you have a dedicated line for personal use, so a separate home phone line, then potentially 100% of your cell phone bill can be a business write-off for you. So keep that in mind and make sure that you're aware that you may want to just set up a separate phone service for your home so you have the cell phone for business use. With the internet, if you work from home, 100% is not going to be deductible, but a large portion of it could be. You're going to need to talk to your accounting professional to figure out that component. But phone and internet service are probably one of the most common overlooked things because people think they're already paying for it in their personal life. So how are they going to pay for it in the business as well? This is the key, and this is why they're commonly overlooked, because it's often things you're already paying for that you're just not shifting and flipping that switch in your head of, wait a minute, I use this in business. This is now a potential write-off for me. I should track this. I should call my accounting professional and talk to them about this. So just look at everything when you're purchasing these types of things as, do I use this in my business? If the answer is yes, you're going to want to record it and have a conversation because chances are it's a potential write-off for you. Third one is travel. So all the time in business, we're talking travel. And so many of my clients are spouse owners in a business. So we have a husband and a wife that own a business together. And so by doing certain things when you're traveling, you can make every trip you take business deductible. So if you own rental properties in other states and you travel there and you're checking on the rental property, potential tax deductions for you. If you're going on a vacation with your spouse and they are a business partner for you and you guys are going to have a board meeting, potential travel deduction for you. If you are traveling, if you're taking your family down to the beach in Florida and you have a client down there that you're going to meet or a vendor down there that you're going to meet, potential tax deduction for this trip for you. So when you're traveling, I want to encourage you to kind of look at it and think, how can I perform business on this trip and make this a potential tax deduction for me? Because I think that is the most overlooked benefit to being a business owner that I see all the time. And so when you're traveling, just kind of analyze the situation and see if there is a possibility for you to perform and conduct business on the trip. And if so, how much of that can that then make the trip a write-off for you? Fourth thing we're going to talk about is meals. There's a lot of misconceptions since the Tax Cuts and Jobs Act in 2018 that these are no longer deductible, and that is not true. You just have to be very careful. Entertainment is no longer deductible. Meals are still deductible. You have actual or per diem, which I have another video for you that you can take a look at for that. But you have actual or per diem meal write-offs that you can take when you're traveling. If you're local and you're out talking business at a meeting, breakfast, lunch, or dinner, even just a coffee or a happy hour meeting, these become business write-offs for you. So pay attention. If you're talking business, it is a potential tax write-off for you. So track those receipts. With meals, here's my caution. You have to keep these receipts. This is the one area that if you get audited, well, there's other areas, but this is one of the areas that if you get audited, the IRS is going to want to see receipts. And if you don't have receipts, you're risking losing 100% of that deduction. So meal receipts, keep every single one of them. If you use QuickBooks, you can actually set up an email that you can just email it right over if it comes into your inbox, or you can download the QuickBooks Online app and you can take a picture of it and it uploads it right into QuickBooks for you or your bookkeeper or your accounting professional to just match to it, and then you have the receipts in there. Just a time-saving tip for you there. And number 5 is mileage for business use on your vehicle. This is one that I think some people are like, oh, well, I don't drive that much, so I'm just not going to track it. And I've actually encouraged some of my clients, I'm like, do me a favor and track it just for a quarter. If after a quarter we realize it's really not worth your time, like, great, you don't need to track it anymore. But do me a favor and just track it for a quarter. Just put my mind at ease, and for 3 months, track this, and let's just see what it does. More often than not, after 3 months, we've already identified several $100s in tax write-offs for my clients. And this is something that they've never tracked before. Several $100s over 3 months can be potentially $1,000 or more dollars in the course of a year. Every penny counts. Why not track something and end up paying more than your fair share in tax? I don't want to do that. Pretty sure you don't want to do that. So, if you've never tracked mileage before, track it just for a few months. See what it does. I can almost venture to guarantee that you're going to see the potential for at least $1,000 of an additional tax write-off there. So, just encouraging you that that is it. So, quick recap on our 5 most common overlooked tax deductions for business owners. We have technology and supplies, making sure that when you're purchasing these items, you're really analyzing, do I use this at all in my business? If you use it at all in your business, it is a potential tax write-off for you. Number 2, phone and internet service. Things that you're most likely already paying for outside of your business, but you need to look at how you can bring them into your business and make them a tax deduction for you there. Number 3 is travel and analyzing anytime you're making a trip, how can you make it a tax write-off for you and looking at that component of it. Number 4 is meals and making sure that you're keeping those receipts and you're just analyzing every time you're out to eat with someone. Are you discussing business and does this now become a tax write-off for you? And then number 5 is mileage. And again, I encourage you to track it just for a quarter to see if it's going to be a beneficial write-off for you. And I would venture to say that it's going to. So those are your 5 most common overlooked tax deductions that I wanted to cover with you today. I hope that by watching those that you found something that maybe you can do a little better, that maybe you haven't been looking at the right way. And my goal is that by watching this, that you may identify a few additional $100 of write-offs for just a few minutes of your time. That's amazing. So keep in mind, your accountant cannot pull these out of thin air. You have to do the work of tracking and managing and asking the questions. If you're not sure if it's a tax write-off, go ahead and ask. Chances are it could be, but you won't know if you don't ask. If you never ask, the answer is always no. You can always reach us at 303-847-0836, or you can visit elevatingprofits.com and schedule an appointment online if you have any questions. We're here to help you. And just keep in mind, running a business is not easy, but managing your finances doesn't have to be a full-time job.